Volatility is still extremely high. We saw midday SPY 0 DTE options going for as high as $500 and $600 at the money, which is absolutely insane. SPX 0 DTE options were as high as 6 grand at the money. I pointed out in a post on Facebook that SPY Leap options were also 6 grand, which were obviously a much better buy than same day expiring contracts and all the risk that comes with that. And if you don't know what leap options are, they're just options that expire in about a year or more. Our weekly expected move coming from the options market is 558.78 high, 508.98 low. And what does that imply? Well, it's implying a higher low and a higher high, meaning that the options market is implying we're going to continue moving higher. Many YouTuber technical analysis are calling for continuation down, and we're going to analyze that possibility in this video. But I want to remember that markets move up 80% of the time. Markets move on rumors, price action, fear, and greed. So we need to account all of those things into our analysis. On the monthly chart, we sold off to the most perfect logical spot for a higher low on that chart. Let's take a look here. I mean, we really couldn't have sold off to a much more beautiful location. I called it as it was happening in real time. Is a great spot for the capitulation low to occur. And at this point, we haven't gotten below that. And our capitulation low theory of that being the lowest low, at least for the immediate future, is paying off. I did buy lots of shares and some options, some call options when we hit that level. And I can say that there's no doubt I have not regretted my decision to do that. On a weekly chart, we're above the 200 simple moving average and starting to climb above some of the lower levels on the anchored VWAP. JP Morgan, let me pull that chart up, had earnings last week and, as you can see, has continued to move in the upward direction. The financial sector is the second most heavily weighted sector in the S&P 500 and extremely vital for us to see a recovery. And if we take a look at what the technical sector's done, we're also seeing a nice recovery on that end. But is it all a trap? And just a pullback to go lower? Well, let's move on back over to SPY. Click on the weekly chart. Make that the daily chart. And we are absolutely, most definitely still in a technical downtrend. We're in a fragile market. We know it only takes a single tweet to take us back down to the bottom. I've been saying it since Trump got into the White House, but we really need to have our awareness up on what the White House is doing whenever we're in a trade. On the chart here, we had a 3-day bounce range in this area here. And then there. And then we had this gap down that showed us extreme fear on tariffs with the announcement of the tariffs going to be way higher than expected. And that put us at max fear. Max fear on this chart is 480. Once again, major key level. It would not be unreasonable to think that the top of this bounce range, 524.75, acts as support, creating a lower high for us to continue to move upward. Over the weekend, we had tariff exceptions on electronics news, and that makes me believe that it would not be unreasonable to see a gap up on Monday, not only due to this lower high possibly forming at the top of this bounce range, but due to that news as well. We had a huge failure from the sellers on Thursday. If you look if you look at the market internals, they were brutally low, near what COVID looked like. We had extreme volume down. ADD was well below 2,000. Tick was well below negative 1,000. Sellers had everything going in their favor, and the market should have flown through the. Let's take a look over here at the hourly chart. Okay. This is what we're talking about here. The market should have flown all the way through this thin structure and made it down to at least here. The fact that the sellers failed in this environment with those type of market internals gets back up above this 523 to 524.75 level is very bullish for me. There's sellers really should have had made it through all that if buyers were not going to be stronger. So if we stay over 524.75, I have to believe we are bullish. At this point, what I'm really looking for is for us to make it up here, either to this gap or around 550 here, or to fill this gap. And then at that point, I wouldn't think that it would be unreasonable to see a gap fill reversal. Let me get the arrow out here if I can find it. All right. I wouldn't think it would be unreasonable to see some type of reversal pattern here, double pop, double top, look above and fail, whatever it is, and then make it down at least probably to 541.25. And it would not be unreasonable to take that short should you see some type of reversal pattern. But I would not be overstaying my welcome on the short side. I would be cautious. And that is, of course, unless the White House comes out and undoes some of the progress that we've made on tariffs, and it wouldn't be totally unreasonable to believe that the White House would not do that at this point. They're constantly changing everything. In fact, within the last couple hours here, they're now starting to say that the exception on phones, computers, electronics, whatever, is only temporary. So whatever that means, we can expect anything to happen with the news at any time at this point. These were arrows I was drawing prior to the news. I wouldn't think it would not be unreasonable for us to see a gap up on Monday. We'll know more once futures markets open up later today. So where does my tone change? Where do I say, all right, we're obviously not bullish? First of all, we'd need to get below 524.75 and then probably get a lower high below this 519 level. Then my tone really begins to change. But as of right now, current conditions, I'm not seeing it at the moment unless some things start to change. Should price skip below 541.25, then I would be looking at going back to the 524.75 level. You would want to take any shorts level to level and reevaluating at each level. Just really being cautious about overstaying our welcome on 524.75. And should we get below this level, we could be looking at the daily chart and checking to see about the possibility of there being any lower high being formed on the daily chart to continue our move up. If we do get that solid lower high on the daily chart, then at that point, we're really having a structural change to the upside. The other thing that we're looking at for was that lowest structural low. So let's swing over here to the 4-hour chart. What do we got down here? Oh my God, we have a double bottom. Come up. Then we have a failed lower high. looked like it was going to come back down, failed. Now we have the beginning formations of what appears to be a possible lower high. Um, then if we open up gapped up Monday, it's going to feed further into the theory of this being a higher low. And hopefully I said higher low the previous time. I may have mixed them up. I like to do that. Let's take a look at the market profile TPO on that previous thin structure. As you can see, we only had single prints all the way through this, and sellers failed to get through that tiny thin structure there. Further adding to the case that this is turning into a bullish scenario, into a recovery scenario. So what's the final piece of this puzzle for this to be working out? I would say we need to see this gap close between 550 and 555. If we do that, that's really the final piece of this puzzle. The one threat that I can think about that we possibly do have on the bear side, if we bounce over here to this weekly chart, you could see on the weekly, we got all the way up to this gap up here, failed to close it, and we have technically created a weekly lower high on the weekly chart. So in theory, in trends, there is that smaller possibility that this could just be a pull up before a move back down. But at this point, without news rolling back on tariffs, I just am not seeing it at this moment. All right, let's bounce over here to the Russell 2000 RTY IWM, see what's going on with that. As you can see, as we discussed in the last video, there is this range here that we had hoped that the Russell would not dip back into. It is still within that range, which does leave an open threat to the market. And this can often be when the Russell's bearish and when interest rates are dropping at the same time, it can be indicative of some type of threat of a recession looming. So, fact that we haven't gotten back above this level, it is a threat to the economy, a threat to the market overall. For us to see the S&P fully recover, go back to all-time highs and continue, I mean, I really think that we would need to see the Russell 2000 over this 2000 line right here. So I'm pretty bearish on small caps. I would be looking for something like this. Lower high, lower low. And then we go from there. This is where, if you want to short, this is where I'd be looking to short anything. Okay, moving on over here to the sectors in the S&P 500. Start here with the tech sector. Does it have the opportunity to create a lower high? Yes, it does. Still in the threat of a downtrend, but opportunity to create a lower high. Communications, still in the threat of a downtrend, opportunity to create a lower high. Or I'm sorry, opportunity to create a higher low. On the tech sector, opportunity to create a higher low. Communication sector, opportunity to create a higher low. Both still in the threat of a downtrend. On the finance sector, opportunity to create a higher low, still in the threat of a downtrend. On the industrial sector, opportunity to create a higher low, still in the threat of a downtrend. On the consumer durables, somewhat of an opportunity to create a higher low, still in the threat of a downtrend. On health, opportunity to create a higher low, but still in the threat of a downtrend. On energy, There is somewhat of an opportunity. Looks like we have near double bottom there. So that is it for this video. The moral of the story is we are seeing things that are starting to suggest that we could potentially have a recovery on our hands. There is no reason to believe we are all of a sudden headed to all-time highs. There are still things looming. There is still a threat of a recession. And White House has been extremely erratic in the way it releases news, which can cause extreme volatility to both sides. As if we do continue to recover, I would expect that volatility will start to contract with that, and we will start seeing lower movements, cheaper options, etc. All right. Stay green this weekend and have a great one.